Good morning. Welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra, and today we're going to look at where money is flowing into and out of. So in the chart that you're looking at here, this is the financial sector. And we did look at this in a prior video about a week ago, and I spoke about what had been forming as a head and shoulders top. And this topping pattern is one in which it makes a new high, and then it makes a lower high, and it happens over a period of time which suggests distribution. Now, the confirmation of that pattern is a break below what's called this neckline area. That never happened. I've seen many of these patterns actually follow through and move to the downside significantly. And I've seen some that fail like this. And historically, this is the reaction when they fail. They rocket to the upside when they fail. And the reason for that being is, understand that every chart is a picture of what others are thinking and what they're doing, what their expectations are. And these patterns form by institutions, big money, trading based on their analysis and their beliefs. So when you see a pattern like this, it's because institutions are saying it's time to sell this particular stock or this particular index. So this is a group of financial stocks. Now, some will also sell short, meaning they're betting that this is going to go down so that they can profit. And when this distribution pattern fails, those shorts, as they're called, cover their short positions. And when they do it together, prices rocket to the upside as these did. So something to remember when you see a head and shoulders top pattern, if it doesn't follow through, odds are high that it's going to react just like this. Now, another group where prices have been in a decline all year is the retailing sector. And I guess they can all send a little thank you note to Amazon for destroying their businesses. But they've reached an area where obviously their investors believe that there's some value. And this gap up that occurred about a week or so ago, this was the ideal reaction. Now, this also is a scramble to enter positions here, at the same time when you get these wide range bars, especially two in a row. Most of the time when you get a wide range bar like this, you get a narrow range bar and prices consolidate. So this tells us that there are institutional investors scrambling to buy these stocks, and odds are that these will go higher. Now, that being said, they are at some resistance here, so the best thing to do is to now wait to see if they'll consolidate a little bit and we can get a better entry point. Now, where is the money leaving? Well, it's interesting. The leaders, and they aren't totally, let's say, in the clear as far as we should be selling these outright. But there is money leaving these, and we have to see what's going to be happening here into 2018. So here's Apple, which has done quite well. It's had periods of long consolidation during this year. So it's still overall constructive, but we're going to be monitoring this to see how far this correction goes. It's actually up about a point or so here right now, so not a big deal in light of how it fell yesterday. And Intel, which we do believe will go higher long term because of the monthly time frames, had a bad day, and we'll be watching to see if this comes down. Facebook had a bit of a nasty day yesterday, was down quite a bit, broke through its major support level here and ended on its 50-day moving average, widely followed moving average. Microsoft had a bad day yesterday. Google, kind of a bad day as well. And Amazon came back in. Now, these patterns have not broken down completely, but we have to keep an eye on them and see how they're going to develop, whether they come roaring back or whether this type of selling keeps coming and breaks through some support and then turns them lower. Now, you can follow these stocks and many others in this sector ETF with the symbol FDN. And this is a way of participating either in the upside when the charts say you should be doing that, or if it eventually rolls over completely, and it hasn't done that yet, where we can short a whole group of those stocks. And these ETFs are much better trading instruments than your regular mutual funds because you can trade in and out of them like you can any other stock. So these ETFs, we like them a lot. Great instruments for trading, and you can see I watch a whole bunch of them and use them for such, as well as the futures markets, which also are very good to trade. They're liquid, and you have great leverage there. So with that being said, let's just see where the markets are at here. Pre-market, the S&Ps are up a little bit, and overall looks pretty darn good. The NASDAQ, which had a bad day yesterday, those big internet stocks, who they call FANG stocks, were under pressure, and this came down a lot. And this major support area is exactly where we need to see them hold from a long-term perspective. And right now they're up a little bit here, and we'll see how far this goes today. That's it for today, guys. Have a great trading day, and we will talk tomorrow.